Hey team, Claire here from My Mortgage, and today I want to talk a little bit about serviceability. So what does serviceability actually mean? Well, it means the amount of income that you have to cover your expenses, including a potential new home loan, but also things like car loans, credit cards, other debt, and your normal household expenses, so power, water, phone, vehicle expenses, insurance, things like that. So looking at serviceability, the big change that we've seen in 2022 as rates have started to increase is an increase in what we call the test servicing rate. So that rate is set by the bank. They can change it at any time, and it's very roughly sits at about 2 to 2.5% higher than a 1 and 2 year fixed rate. So at the moment, that's sitting at somewhere between 5.5, 5.75, and with some banks up to 8.15%. So you can imagine that if we stress test your income and expenses at a rate that's much higher than what's currently on offer, is that it can actually change the amount of money you can borrow. So I'm getting a lot of people asking me, hey, look, I can afford this. My current loan, the repayments are only $1,000 a fortnight, and I can afford to borrow another $1 million, not a problem. And the reality is that probably you can, but the way that the banks assess risk is that they look at that rate, that higher rate, of somewhere between 7.5 and 8.15, and they even stress test your existing lending. So you might have secured a great rate for 3 years at 3.5%, but they will check that you could still service that lending at that higher test servicing rate. So it is impacting some people's ability to borrow money, and they're a bit confused about it, which is totally fair enough. So that's the reason why the bank might not be able to lend you quite as much as what you think they can. But the solutions to that is sometimes around building up income, other sources of income like border income, small business income, additional hours or pay rises. All of those things can impact how much you can borrow. So we will often look at that, and also maybe reviewing some of your expenses as well. Things that maybe you don't need or you don't think you're going to need in the future, we can have a look at that and review it with you. So the moral of the story here is if the bank has said no, let us have a look at the situation, make sure that that you're actually in the best position that you can be, and if serviceability is something that's affecting you, we can talk about what levers to pull to make that better. So get in touch with us. I'm Claire at mymortgage.co.nz, or you can jump on the link below this video and book in a call directly with me. Look forward to talking with you soon.